Hi, good evening, and welcome to the 16th edition of the Edge Sparks, our bite-sized insurance products, the way forward. We have with us Mrin Agarwal. Mrin is the founder of Finsafe, a financial education company in the space of financial well-being. Mrin has more than 24 years of experience in wealth management, and she writes for multiple publications, including Deccan Herald, Mint, Money Control, and Business Standard, amongst others. Welcome, Mil.
Thank you, Piali.
Yeah, Rin, you can go ahead.
Okay, thank you. And good evening, everybody. Very nice to be here today. I would like to start by introducing our panelists. First off, Mr. Samir Bansal, who is the Chief Distribution Officer at PNB MetLife. And he's been associated with PNB MetLife since 2007. In his current role, he's responsible for driving businesses across distribution networks, including bank assurance, agency, and direct channels. We also have with us Mr. Gokuldas, who has been the Chief Business Officer of Karnataka Bank since 2019. And he's overall in charge of credit sanctions, credit marketing, branch banking, and digital channels. We also have with us Mrs. Anuradha Ghorpade. She's a financial advisor, and she's also with PNB MetLife since 2001, and she's achieved 16 MRDTs and 1 COT. So welcome, everybody, and nice to have you all here today on this panel. First off, I'd like to start the discussion by asking Samir that one of the positive impact of COVID has really been that a lot more people are now looking at life insurance more seriously. And as we all know, India is a very underinsured country, and hopefully now people are really looking at getting the right amount of insurance for themselves. We're also seeing a lot of first-time buyers coming in varying degrees of awareness. And of course, everybody has different requirements. So how do you see the customer profile in Karnataka?
Thank you, Mrin, for the question, and thank you for having me on this panel. I think it's a great question in today's time. We're all undergoing hit by this pandemic, and like you rightly pointed out, India is a very underinsured country. Almost 75% of our population does not have any insurance of any kind. Even the ones who have insurance, unfortunately, it's not adequate. So, research found that typically Indians have only 10 to 15% of cover that they actually need. So it is grossly underinsured, and a lot more needs to be done in this space. The pandemic surely has created a lot of awareness. We are seeing a lot of new buyers coming forward, inquiring about life insurance. They also want to interact with insurance companies through digital means, looking for products ranging from risk cover to guaranteed products that companies like PNB MetLife has to offer. My recommendation to the new first-time buyers would be to choose their plan carefully depending on their life stage. Typically, every consumer goes through a life stage of when they're young, 25 to 30 years, they should go for a risk cover, cover themselves. When they get married, have a family, again, increase that life cover to protect their family. When children come along, important to plan education for the children. And in any scenario, the child should make sure that they go through the education, and life insurance can be very helpful there. And eventually, plan for their near-term goals like having a nice house, having a nice car, or going on a nice vacation, and then eventually retirement. So in all these stages of life, life insurance is probably the only financial services product that can come very, very handy. To the other point in terms of what are we doing for our customers in Karnataka, like I said, Karnataka customers, like the rest of India, are coming forward, inquiring about life insurance, and they want to use a digital means to buy these products. And I must tell you here that we have equipped our sales force, our advisors, our bank partners like Karnataka Bank, with digital tools so that their customers can very easily buy products as per their need and get on the journey of life insurance.
Great. So you talked about enabling people through technology, but I think we take a step back, and I would like to ask Anuradha, who's been a financial advisor for so long, what is the right way to choose a life insurance policy? Anuradha, I think you're on mute. No, you're still on mute, Anuradha.
Okay, now?
Yes, now we can hear you.
Okay. Thank you so much. Basically, I think insurance, when you talk about insurance, many people are frightened. But I think this is the most simple instrument. And one has to understand what basically is the purpose and the need. And basically, there are only two fundamental requirements as to why a person requires insurance. It's basically you want to protect your family, and secondly is wealth building. So when you talk about these things, it's very, very important to know that income protection is the main thing that we have to look out for, where you protect your family, especially when the breadwinner is not there. It's basically the loss of income which has to be done. I think many people do wonder as to what is required over here. But let me tell you that many people wonder as to what we can do. And the main thing what we require over here is a planning, is it has to comprise of two main things. It's basically a term plan and a health plan. These are the major things which we look forward to. And nowadays we have come out with term plans which are most affordable. And this is the best form of life insurance one can have. So I think once you get to know that how to have the term, it's much better to have the most important thing is the most abundance of term plan. And how can this be done is only when you move out in life in different stages, you can do that.
Absolutely. So agree with you, Anuradha. And, with COVID, of course, it's everybody has become more digital now. And even those who were not willing to adopt technology have now adopted technology. So I would actually like to ask Mr. Pai that how easy is it to actually buy life insurance through banks? And, how is technology really enabling a seamless operation, basically? I also have another question to you that, so buying it is easy. What happens in terms of claims? So I have two questions. The first is, how do people actually buy life insurance through banks? And the second is, what about the claim process as well? Does the bank help out in that? Or what does the insured individual do in case of a claim? Mr. Pai, you're on mute. Mr. Pai, can you please unmute yourself?
Yeah. Good evening. Thank you for having me here. The next question is, the bank assurance partners are good breadwinners for the insurance companies now. See, there are a lot of reasons why the bank assurance partners are important. As bankers, we have become the one-stop financial solutions for the customers. We go beyond the banking. We, along with the customers, we have got a family relation. We have got all the details of the customers with us. Maybe with the minimal requirement, we'll be able to give the required details to the insurance companies, and probably the policies can be issued very fast and very early also. And the customers have got a good bonding with the bank. We trust the customer, customers also trust us. And we know the entire family of the customers, their children who are there in the family. We have got a good database. Based on that database, we can try to understand, as told by Mr. Samir or Madam Anuradha, what life stage they are, what type of policies required, whether for children's education, whether for their family protection, whether for investment or retirement. We can easily find out from our database, and it is easy for us to guide them and give the proper advice. And as a responsible banker, it is our duty to give them the sell the proper policies to the customers. And nowadays in the insurance industry or any industry, the mis-selling is the buzzword. But as a responsible banker, it is our duty to give the proper product to our customers. And when we give the proper product, it will be easy for any customer to have their claim. I mean, even during the getting the survival benefit or from the death benefits or any claims. I don't think it is too much different from any other type of claims, but as a responsible bankers, customers believe us, and we will be always at their doorsteps to help them whenever it is required. And just to give some additional information as far as our bank is concerned, we have got around 857 branches, but the beauty is that all the insurance are sold by the specified persons. We have got more than 2,200 specified persons in our bank. That means to say, on an average, we have got more than 2 specified persons in the branch. They are well trained, they are licensed, and at any given time, it will help them. And as far as the technology which you have, the second question, yes, now the present day is the era of technology. It is not only in the insurance industry. You can name any field where technology has not came in. Technology has come to all the fields in the world today. And yes, Mr. Samir ji is here today. The PNB MetLife, which we have the bank assurance tie-up, they have got the concept of e-branch. In that e-branch, it's a device agnostic app. And it is available to all the sales force. The sales force, they can log in and find out what the status of their policy. They can even log in their applications, find out the status, and even inform the customer or the insurer about the status at any given time. And it helps in improving the productivity as well as the efficiency. Thank you, Mrin.
Thank you, Mr. Pai. Samir, coming back to you, can you just take us through, there have been a lot of changes in life insurance during 2020. And there are some new rules and everything that are going to be applicable from April 1st as well. So can you just take us through, some of the changes that have happened and how is it going to impact policyholders?
So like most industries, Mrin, life insurance also has undergone a change. And I would say for the better. When the pandemic hit us, at that time, like we said, the awareness went through the roof. Everybody was trying to, look for a life or a health insurance plan. But the problem on the other side was that because of the lockdown, the branches were shutting down, the face-to-face medium was closing down. So it was very difficult for customers to actually buy a life insurance plan in that environment. And many insurance companies, including us at PNB MetLife, the first thing that we did was to digitize our processes, to make it convenient for customers to come on board without really interacting with their advisor or with their bank on a face-to-face medium. And I must here appreciate the role that our regulator played, our IRDA. They really stepped in, allowed us, some exceptions of the manual process, which was earlier there, to digitize that process, make it OTP based, make it completely app based. And like Mr. Pai said, we at PNB MetLife have this, tool, a front facing tool that all our distributors, our advisors like Anuradha and banks like Karnataka Bank can now use to onboard their customers digitally without really, getting them to come face to face or doing too much of face to face interaction. The other problem, Mrin, that happened when the pandemic hit was that customers wanted to buy a policy, but for that they were required to go to a medical. As you know, life insurance policies require medicals. You need to go to a medical center to get yourself tested. They were obviously not comfortable with that, and there again, life insurance companies like us stepped in, and we, what we did was we moved a lot of our medical underwriting to telemedical. So we could call a customer, take some basic details about the customer's health, and underwrite that policy and get the customers on board. We also introduced, very interestingly, a video verification process, through which there would be a, like we are talking today, there will be a video recording of a customer. They will express their health details. Questions will be asked, and there you go. You can issue a policy just basis of video verification that you do of the customer. So these were some of the tools that we introduced on the ground, which were very useful during the pandemic. I must also add one another area where customers really wanted to get comfort was in servicing. So I've now come on board. I've taken a policy. How about my servicing? How do I get my claims on time if at all there is a situation like that? How do I get any basic service like changing my address, understanding my NAV or my other policy details? Again, what we did was we introduced the industry first artificially intelligence powered app called Khushi. And Khushi, as you know, it's happiness, which is the app that we introduced, where customers can do all their basic transactions without really coming to a bank branch or to our offices, and it was very, very seamless. On the claim side, we introduced a claim assured process where within 3 hours we could settle customers' claim, giving them a lot of comfort that you are in good hands, your money is in good hands, and that really worked wonders, because in the last 9-10 months of the pandemic, I'm very proud of this fact that our term policies, our risk cover policies, actually went up by 100%. That's how big turnaround that we have seen in customers' demand for some of our policies.
That's really good to know. And, now that you've talked about term plans, I actually want to come back to Anuradha, because Anuradha was mentioning about the best insurance policy being the term plan. So, what is the right amount of cover that one should opt for, Anuradha? And is there any thumb rule that first time insurance buyers need to have in mind, because everybody may not be knowing about the HLV calculator. So is there a thumb rule that you can give them?
Yes, that's a very, very important, because many people come to me and say, what is the amount of insurance that one requires? I would come back and say, basically thumb rule, one can opt for maybe 15 to 20 times the current annual income, basically. But when you go through it, it's not today. It's today you require it. But tomorrow, as the income increases, you can keep on increasing your insurance cover. And basically, it's term plan, because term plan is a wholesome concept. Term is any eventuality, is only the breadwinner can get is through a term plan. So this is the basic thumb rule. And I would suggest to people also that it's very difficult for you or me to judge as to what is my coverage. The main thing and the very, very important is having a qualified advisor to come there, sit with you, advise you, and be a very, very patient listener. That person will be able to guide you as to what is the coverage, what is required by an individual. Because many people think that most of the people, as Samir said, are inefficient, and they don't know how much of cover they require, basically. So it is us people as advisors who sit across the table with them and guide them in planning for basically the family's insurances and the investments. So the basic thumb rule depends on an advisor where they sit with that individual, and everybody's circumstances and situations are different. So everybody requires something different. So only a qualified advisor will be able to guide them through that.
Well, I do agree with you on that. But I would also say that, many times what happens is that a lot of first-time buyers, may not know who to approach. And, these days, actually, I see a lot of DIY investors, so as to call them. A lot of people like to do things themselves. And, so of course, I've heard of this thumb rule, which is 10 times your annual gross salary, is what a lot of people talk about. So is there any number that you can give the viewers out here that they can do if, for whatever reason, if they're not able to approach an advisor, what is it that they can do themselves in order to find out how much insurance they should have?
I think still I would advise, Mrin, that it's very necessary when you talk about the income. Basically, a person's income is 10 lakhs. So you have to, depends on the age. You have to multiply the income and say that this is what I basically require. So I would also calculate and tell them the basic thing is consult a person where you can advise them, because it's very easy to tell me, and especially during this time, it's very necessary to take advice, maybe from a friend who's an advisor, maybe a qualified person, but who knows something about insurance, basically.
Mm-hmm. Well, for all our viewers out here, of course, all insurance companies have the HLB calculator. While yes, you should work with an advisor, because you could talk to them about your financial situation and your requirement and your financial needs. But for whatever reason, if you're not able to do that, you can certainly check out the HLB calculator, which is a human life value calculator on any insurance company website, and then take a informed decision. Certainly, just because you calculate HLV doesn't mean that that's the end of it. You still
Absolutely.
need to figure out which company to go with and stuff like that. One of the things that we have been reading is that people tend to hide certain information. And, while it's great, and Samir spoke about all the changes that have happened last year in terms of, pretty much issuing a policy through the video route, right? Where you have the telemedicine process, you have the video verification process that he talked about. Sometimes this could also lead to people not sharing the right information or hiding some facts. And Mr. Pai, I would actually like to ask you that how does hiding facts during purchasing life insurance affect the claim process?
Yeah, madam. Here I need to go to the basics of the insurance. When I was first introduced to the insurance, I was told about 3 facts about insurance. First of all, why we go for insurance, why we have to go. One is, if the breadwinner of the family is not there, then first there is a physical loss. If God forbid something happens, there will be physical loss, which cannot be replaced. Second loss is the emotional loss. Yes, nobody can fill that. The third one is the financial loss. Yes, if you plan properly, financial loss can be somehow, we can bridge it. The family or the dependent family did not go round the street with a begging ball for the financial help. Yes, insurance is one of the social securities which can definitely take care. The very purpose of insurance being the protection or taking care of the family. If you hide some facts, then the getting claim may be delayed or it may be forfeited. There is a saying, if you have some legal matters, you should not hide anything with your lawyer or advocate. If you have any health issues, and you should not, if you have to go to a doctor, you should not hide anything. You should be very transparent with your doctor. Similarly, for any financial assistance or financial help with the banker, you should be truthful. The fourth one being now, for insurance, it equally holds good that we should be very, very transparent as far as our financial and health details are concerned. If we hide these things, and tomorrow, God forbid, if something happens, then while getting the claim, there will be a lot of investigations. And if the fact comes as a false, then the unfortunate family will not get the claim and there will be a lot of litigation. So therefore, my suggestion and advise to all the customers or anybody who are opting for insurance that they should be very, very transparent in giving their information about their health and finance in the policies while taking the policy itself. And the second thing is always we have to provide the correct contact details in the policy, not only for the insurer, even the uh, nominees, because at the time of requirement, the correct contact details only will come to help. And the truth of insurance, it always depends on how fast and how best we pay the claim. So therefore, the transparent way in giving the information in the policy will go a long way, and that should be the order of the day. Thank you.
I have a quick question, and maybe Sameer could help us with this. That as far as claims are concerned, typically, at an industry level, yeah, and this is just from academic interest, but at an industry level, what is the percentage of claims that typically get barred due to hiding information? And what is the typical delay that one would see in the claim process in case if information has not been provided correctly?
Mrin, so, like Mr. Pai rightly said, if you be honest with your declaration of your financials and your health condition, in my 20 plus years of career, I have never seen a claim being declined. It always gets settled. In fact, most claims get settled within a three-day turnaround time. In fact, like I said earlier, we have now started issuing claims within 3 hours of being registered, and all the honest, truthful, customers who had declared upfront, they get their claims on time. However, in our case also, and even in the industry case, 2.5% customers and their claims not eventually go through, or they get declined on the retail side. And on the group policies that that we have, which are the small ticket size policies, there are 1% odd customers who do get declined. And it typically happens because they probably were ignorant at the stage of buying, or they did not upfront declare something. But again, this is where I would again bring in the advice that Anuradha spoke about. When customers do it themselves, there are chances of them going wrong and being ignorant to declare certain conditions, etc. But when they take right advice from our advisors like Anuradha and Karnataka Bank, the chances of that really is negligible. So, that's the situation right now on the claims bill.
Yeah. And, I think Mr. Pai brought about another very important point about having your financial documentation in order in terms of your address and your nominee, because a lot of people believe that, oh, these are just like minor matters and people change addresses, but they forget to change their address on the policy documents. Hopefully with e-insurance, all these things are taken care of. Sameer, I would like to ask you another question. There's this whole new product of bite-sized products which are now coming in. So if you could just first of all start by telling us, what is the meaning of these bite-sized products, and how are they really going to, be beneficial for consumers?
So, Mrin, like I said earlier, India is a country which is grossly underinsured or not insured. 75% of our population has no insurance of any kind. And, Government of India has taken many steps in that direction, in the right direction, I would say, by introducing products like Pradhan Mantri Jeevan Jyoti Bima Yojana, which can give, first-time buyers covers up to 2 lakhs for a very, very small premium. And that's what is the bite size or sachet size, as you would say, where, a small premium to get you a small cover to at least get you started with the journey of life insurance. It requires very little documentation. No underwriting is required. You can very easily purchase it, and you can get along on the journey of life insurance. This is a good entry product, I would say, and companies like us at PNB MetLife, we're also going beyond the 2 lakh cover that is currently extended by Pradhan Mantri Jeevan Jyoti Bima Yojana, taking the definition of bite size to about 4 to 5 lakhs, which is a decent amount of cover which every Indian should really hold. The amount of premium is also very small. Just about 1,000 rupees for the year is roughly, depending on the customer's age. If I do the maths on a per day basis, it's just about 3 rupees per day, in which you can get about 4 to 5 lakhs of insurance. And I must add here that every Indian, whoever is listening to this, panel discussion, should make it a point to have some basic cover to protect themselves and their families.
So is this bite-sized insurance a term insurance?
Typically, yes. Typically, these are all term insurance policies, and these are, like I said earlier, the lives, depending on your life stage. These plans need to change. You can start with a term plan. You can get into a wealth accumulation plan, and you can eventually buy yourself a retirement plan, which can give you a long-term pension. So yes, these bite size are small term insurance plans.
And so is the facility of top up or super top up available on this bite size insurance?
Typically, these bite size insurance are one-time cover offered to you. But if you want more, you can go for additional cover separately. These policies would not have top up so readily available.
All right. So I'm sure the product is, going to certainly evolve over a period of time as well. So, certainly something that first-time buyers can consider buying these bite-sized insurance. At least start off with that. And as your financial needs grow, look at basically building on. I would now like to just open the floor up for questions. And so if you have any questions, please feel free to type them in the chat box, please. Just checking for questions. So there's a question out here, which is, when should an individual take up a life insurance plan? Anuradha, if you could answer that.
Yes.
Immediately when you start working, or when?
See, this is a very interesting question, basically. When should one start? Now, with my so many years of experience, basically in the insurance industry, one should take a plan when you don't require it. Because when you want it, you will not get it. There are 2 reasons why a person cannot get it. Because when you want it, probably your age is more, your premiums more, and it's not affordable. And secondly, health plays a very important role. With health, BP is extra premium. So it's always advisable to buy a plan basically when you are young. When you start your career, there's not much of expenses basically. So I think an individual always has an aspiration. Yes, I'm going to grow. My income is going to grow. And this gives them much time to have the calculated risk which they can take. And this, they must realize, is basically the power of compounding basically. I think this is the ideal stage where all the individuals must realize that they can build up a basically habit of saving, where they put part of the income aside and then they use that income to basically invest in other financial instruments. And the younger you are, you can take the high risk. And we have the equity-based insurance basic plans. And I think it's very advisable for the people to just start their things of early savings, where you can have much more where you realize that every penny is going to count because you started very early. At the same time, a person who starts later in life, you realize there's a lot of difference because of the age. So for me today, if somebody asked me, when should I get it? I would say buy right now, because tomorrow is full of surprises. So the main thing is, it's best thing to buy right now.
And, of course, you've been talking about the term plans, but I think there are some very important riders as well that
Absolutely.
you need to know about. I think critical illness is so important. So is that something that you normally tell your customers to buy as well with the term plans?
Yes, some of them think that they should attach it to the rider along with the basic term plan, but some people prefer to take it as an individual policy where they don't want to mix the term along with the critical. Yes, but we do have the options where the clients decides this.
Yeah, but it must be something that you're actively advising, right? Given
No,
now,
we do, because nowadays it is a necessity which people want the riders. Riders will play a very important role, because sometimes when you want it, you don't get it. So they always think that we have to have these extra riders. So critical illness is something which we do pitch in for the customers basically.
yeah. And Mr. Pai, I would also like to ask you that, are you seeing more people buying these riders, or what are some of the changes that you're seeing in terms of what customers are actually buying in the last 1 year?
Mrin, the last 1 year, we can definitely name it as COVID-19 year. Even though it was 2020, it's a COVID-19 year. I mean, COVID-19 2020. We are seeing a lot of changes. First one is the moving towards digital. The search for requirement of insurance, as per the Google report, it has gone up by 30%. Earlier, there were around 2 lakh people searching. Now it is around more than 2,90,000 people are searching per month for the insurance requirement. That is one thing. Second, we have seen the credit protection group policies. That means group policy is having the credit link. For example, if somebody has taken a housing loan, now they have started insuring the life based on the credit line. That insurance they have started. And of course, I can't say, but in other countries, in our countries, the insurance is one of the main factor for the protection of our income. When we do not have the social security, people have started thinking of the social security and started buying term insurance. And the insurance is now, we can say, earlier it was a more of a sale product. Now it has started coming to the buy product. Instead of pushing, it has started now pull. Now people have started buying. And we are having more of inquiries and the online request. Thankfully, our insurance partner, I mean the insurer, TNB MetLife, they have given us the links, and the clicks on that links has gone up drastically. I think people have gradually started moving towards digital and the online requirements. Here, I strongly believe in history. My parents, they were telling why insurance required, because just for the protection of the family. Earlier, we were into the joint family. Of course, even if though there was no insurance, families to take care. Now that has slowly moved to the nuclear family. Here, the role of insurance is very, very important. And since the last 1 year, COVID has created havoc, it has still become more important. Thank you.
Okay. So with more people looking at buying insurance digitally, and hopefully more consumers coming into insurance, and as Mr. Pai gave us this very interesting statistic that on the Google search on insurance to buy has gone up by 30%. That's really good to know. But what are some of the key expectations that one should have, like a consumer should have, from a life insurance policy?
Mrin, a life insurance policy is the most useful when you need it. And therefore, like Anuradha said, when you need it, you might not get it. And therefore, you need to buy as early as possible. And here again, I would reflect back to the need-based approach that you will get from companies like PNB MetLife, where we have divided our need categories into 4 broad need categories, and we call it the circle of life. Need categories being protection, family protection, child's education, retirement, and long-term savings. So these are 4 broad need categories every Indian has. And my suggestion to your viewers would be that when you plan your life insurance, plan it around these four needs. Depending on your life stage, see what you need currently, and as you go through your life cycle, keep adding more plans to your bucket, so that you absolutely well taken care of in every aspect. So that's what I think they should expect from the life insurance policy.
Okay, Anuradha, I have a question for you, which is, typically when one looks at buying a term plan, right? So what do you advise your customers? Like, do you advise them to split it up among 2 or 3 plans, or go with one insurance company? What do you normally advise?
The need of customers today is so different from what it was basically a decade ago. Over here, it is very, very important, which I tell the customer, that it's very important to choose the right plan at the right age. And for this, one has to consult and do basically a need-based planning. This is a need-based planning where you require as to what is your appetite, what you want. And this can arise only after you sit and discuss with basically a financial planner. This person will be able to guide you as to what is your requirement basically, and what is the appetite and what is the circumstances which you want to go. And over here, many people realize that there are different products. A term is one of them, but it depends, probably has got the term. Then we have to add on the products, depends on basically not only one insurance plan, but a couple of them. As Samir said, there are different plans in different stages of life. So once, when you start your career, you have one. You can come out with something like an investment plan that time, because you're young and you're ready to take a risk at that time. Second, you can look through a plan which basically is maybe after marriage, a protection plan, and basically also looking out for a retirement plan. So there are different stages of life where you want to choose which is the best product and the best plan for you.
Yeah, I know that. But, my question was more from the fact that, people always say that you should not, like how people talk about diversification in investments, the same way people talk about the fact that, you should split up your policies. So, Samir, if you could just throw some light on the way insurance companies are capitalized, and, whether, you actually need this diversification as far as buying insurance policies is concerned, especially if you're doing term plans.
Life insurance companies offer products which are protection oriented, which can give customers a protection cover. We have products which can give long-term guarantees on investment to customers. We also have annuities or products which can actually give a lifelong pension to customers who do not get that benefit from their employer. Most individuals who are in the private sector don't get the luxury of pension. It's solely for the government servants who get that benefit. So life insurance companies can actually come and give you the entire spectrum of services, and we really feel that life insurance should not just be seen as something which is for risk of life or for death. It is much more than that. It is for living too short, which is protection, and living too long, which is retirement. It needs to be both of these spectrums need to be taken care of. And as a life insurer, the question you asked, we would like it to be a very balanced product mix. We would like to cater to all needs of our customers and not limit ourselves to one or two needs only.
Okay. And Mr. Pai, do you see, you talk about a specific team in the bank. I think you mentioned about 2,000 people in the bank who are basically insurance advisors. So, just from an employment perspective, do you actually see more bankers wanting to become insurance advisors?
Certainly. Because now banking has become a one-stop financial solution, not only for financial, for all solutions. Now, because of the advent of technology and other things, our managing director always used to say, the future of the banks will look like this. a technology company owning a banking license. And for us, more than our main bread and butter is interest, but since last few years, our other income has become is playing a major part in getting profits for the bank. Yes, by sale of life insurance. Why only life insurance? We have got a lot of other third-party products for investment. We have got also mutual funds. We also have got general insurance products. All these products have become our. I don't say it's a byproduct. It just become the major what is that? The products for our bank. Earlier we used to say we also sell insurance. No, now we started saying yes, we sell insurance with pride because it is also adding to our bread and butter. I think all the banks will go for this type of bank insurance partnership. It's not only that one. When we think of this life insurance, and yes, I also definitely agree with what Mr. Sami told. Is it is not only the protection, we can go for beyond that. But when you just think of a protection of a poor family, which is being helped by this type of insurance, apart from banking, we also see some light in the life of others. That gives us a lot of satisfaction. Thank you.
Absolutely. I would also like to ask Samir, specifically, I think, one of the categories that finds insurance very expensive, and this is a question that's been received on Facebook. Is there anything on life insurance plans for senior citizens? Because, that is one category that finds buying insurance very tough because of obviously the costs associated are higher given the fact that, they would have, maybe they may not be medically 100% fit.
You're right, Mrin, and as you grow older, it gets more and more difficult. And even if life insurance companies offer life cover to people beyond 60, there will be medicals required. There will be more documentations required, etc. Companies like us at PNB MetLife, we do offer covers to 60, 65-year-old customers also. My suggestion to customers in this age category would be to look at really retirement pension solutions. Companies like us have annuities where you can put a lump sum and start getting a pension from the next month itself, and it can be a long-term payout to you, your spouse, and eventually you also have options to get the deposit that you have made back to your nominee. So there are various kinds of annuities which are available for senior citizen, but there are life cover plans also, protection plans also, but they will surely require a lot more medical and other documentations for them.
All right. So if I could just have some closing comments as we come to the end of this of the Edge Sparks, if I could just start with Anuradha. As a closing comment, it'd be nice if each one of you could just give one tip for our viewers on what they need to be doing as far as their insurance is concerned.
Today, I would tell them...
Apart from getting an advisor, okay? Something else.
No, I think today is the right time. Don't waste time. Think about what you can do today, because tomorrow nobody has seen. And with this, I would tell everybody over there, that each one of you over there, that insurance is the main key. This is the key which is going to look after everybody in the family and basically the breadwinner. So start early, and I think all of us can have a win-win situation where the family is looked after. So the main thing is buy insurance today.
Buy early, start early. Okay.
Absolutely.
Mr. Pai?
Yeah. Buy early, start early, have adequate insurance, live a peaceful life. That's my suggestion.
Yeah. And finally, Samir, can we have some closing comments from you as well?
Yes, Mrin, thank you. So I think, I would just say that don't think of insurance just as a product to have a life cover. It's much more than that. It has the potential to take care of all your life stage requirements, retirement and long-term savings for your children, etc. So think beyond protection. Protection, of course, is the most important aspect of insurance, but think beyond that. Plan yourself well, and definitely get yourself covered.
Thank you so much to everybody. And, it's great to know the level of digitization of insurance and how much easier it's actually become to buy insurance. I mean, actually, I myself did not know about the video verification. So it's become very easy to buy insurance. Couple of things you need to keep in mind. First off, always look for buying protection. Buy the right amount of insurance, consult an advisor. Of course, anything that you do early on in life always reaps benefits later on in your life. So always buying early, taking care of all your situations early on always helps. So thank you everybody for
Thank you so much, Mrin.
today. And thank you, Deccan Herald, as well. And yes, have a great evening.
Thank you very much, Mrin. Thank you.
Thank you very much.
Thank you.
Thank you.
Bye.